All right, welcome everyone. Welcome. Hey guys. Hey, what's up, Joel? Big ups to you, my man. So it's a pretty late night stream here. I know there's a lot of people in the Central Time Zone and the East Coast Time Zone, so my apologies there. But hopefully you guys are able to join for a little bit. I'll be going over things very quickly for tonight. But welcome to Thursday's stream for this trading week. All right. So with that being said, let's quickly begin. Alright, so what is the actual question for the stream tonight? Is the market bottom finally in? Alright, that's the question that everyone has been asking. Well, first off, let's look at things from a technical perspective. So if we take a look at the current price action for the past 2 weeks, we have been consolidating this entire massive 10% plus correction to the downside from the current all-time highs. Price print up $613.23. It's hey, what's up guys? Welcome. Make sure you guys hit that like button down below as usual. What's up guys? You guys just joining in, so you guys have not missed too much. But as I was saying here, the past 2 weeks have been just simple consolidation, including this week so far. Now, as we have made this nice consolidation to, again, just putting a break on the sell-off that we've had so far, this textbook correction of negative 10% plus, we have formed a very textbook bear flag. Now here's the thing, okay, when it comes to bear flags during major uptrends and all the higher time frames like the weekly or even the monthly, okay, we need to be cautious about how these bear flags do, and if they will actually come through and give us another breakout to the downside or another second leg to the downside. Because if we look at the most recent example of a bear flag forming during a nice pullback was, well, back in April of last year, right? Back like mid to late April, and obviously early into May as well. So this is where we had that official kind of second quarter weakness that we saw in April and of last year. I mentioned this as well. And this eventually led into basically a bear flag that formed. I mean, if you guys can see it here, okay, it looks very similar to the one that we have now. Obviously, this one's a little bit more, well, it looks tinier. This bear flag obviously looks a lot tinier than to the bear flag that we have now, because of the fact that we've had such a deeper correction to the downside. But this bear flag eventually ended up not working out, and the price actually broke to the upside, giving us a very nice big push to the upside, eventually getting us into new all-time highs. But then again, the new all-time highs was able to be made very quickly because, well, the initial pullback wasn't too much. I mean, if you just take a look at the percentage here, okay, I think this is like 5%. Yeah, a little over 5% here, 5.50% correction from the end of quarter one all the way up into the beginning of quarter two, so of last year. So to me, obviously from that perspective, this is nothing, right? I mean, this is a very nice negation of this bear flag, but again, nonetheless, it's a bear flag that was able to break to the upside, and this is one of the most recent examples that we have here. And it's good to, again, come back to those recent examples when we're doing technical analysis, the previous history, to see if the price could potentially react in the same manner. But here's a caveat to that when we're comparing these two different bear flags, right? Because first of all, this bear flag was forming below the daily 50 SMA, along with the fact that the daily 10 and the daily 21 SMAs have fully caught up to the price. And so far, right now, we are still in a similar situation where both the daily 10 and the daily 21, again, my daily 10 is my red line, my daily 21 is my light blue line, have caught up to the price, and it's now consolidating with the price as well. However, in this current time, the price is sitting below both on my daily 50 and daily 200 SMAs. So there's a lot more heavy selling pressure to the top side that we have to watch out for, a lot of supply overhead. And it's one of those things where these comparisons can work out really well, especially when it's using a recent example like this bear flag, where like we're comparing the two bear flags here. But with this deeper correction, we're most likely going to see a lot of heavy, headwinds for the price to try to bid up higher. But at the same time, it would make sense for us to at least try to retest one or two previous support levels that we've broken to the downside as we're having that nice correctional move. And obviously I've given you guys these levels, but we've already retested the very first one, 574.50, or again, going to round up 575, which I've repeated multiple times as well, which actually coincided perfectly with the ever rising daily 200 SMA. And then if I want to see the price continuously bouncing, I would want to see the next previous support level, but now new resistance level at 585. Now, why does all of this matter, right? Why does these retests matter? Because they will answer whether or not we're officially seeing a market bottom being formed here, right? And so what are some other clues that can we look at for a potential market bottom to be officially in right now? Well, first of all, let's take a look at some leading stocks, right? Like Visa. Okay, right? So this also pertains to the PCE report that comes out tomorrow. So that's the Federal Reserve's preferred data or report to look at for specifically for inflation, right? And that's how they basically. Long story short, right? If you guys aren't readers of the CFO Single Watch report, long story short, it's just a way for them to act on inflation and what they need to do based on what the PCE report says every single month. Okay, and so the PCE report for the month of February is coming out tomorrow morning at 5:30 a.m. Pacific Standard, Eastern Standard Time. Okay, oh no, Pacific Standard Time. Okay, or 8:30 a.m. Eastern Standard Time, right? So the reason why I'm looking at Visa or even MasterCard, okay, MA, okay, is that they both performed really, really well into the PCE report. Now, this is interesting because Visa and MasterCard are both, they're both showing some very good V-shaped recovery already. And I always like to look at Visa and MasterCard because they tend to show relative strength a lot earlier compared to the overall market. I mean, I think I've repeated this multiple times in 2022, 2023, 2024, all the way up into today, right? So now, again, when you compare Visa and MasterCard, they kind of move in a very similar manner. Obviously, both are very, very strong, but the most important part about what I'm trying to show you guys tonight is that they're both making V-shaped bounces so far, and both of them have recovered back over their major SMAs, like Visa here over the daily 50, the daily 10, and the daily 21 SMAs, closing with a very nice strong at highs over all three SMAs, right? And so again, with the PCE report coming out tomorrow, we already know that consumer confidence is down a lot, right? Well, not too much, but it is considerably down from the highs that we. And on top of that, we're also seeing it's not paradoxical, but it's just opposite data that kind of contradicts the consumer confidence, right? Because we're seeing that credit card transactions and activity has overall grown and has hit new highs since last year. Well, every single year for the last 3 years. And we've also seen that swipe fees, right? The fees, the credit card fees, have also gone up as well. All these credit card companies have increased the swipe fees, and usually we tend to see that happening when we have increased consistent credit card transactions and activity, right? These are companies that are looking to capitalize and have some gains on these increased growths in activity and credit card transactions, and it makes sense, right? And they're a company that are trying to continue to grow in revenue, continue to increase and improve their. So, to me, with Visa and MasterCard going up into the PCE report, and on top of the fact that they have already been showing some very good strength, and the fact that they've already recovered from their very short correction to the downside since the beginning of this month in March, right? So that's when we had our actual heavy selling coming in for the overall markets. They're already recovered from that, right? They recovered more than 50% from the pullback they've seen for both of them, Visa and MasterCard, since the beginning of this month, right? They recovered more than half based on today's close for both of these two tickers. So just the combination of both of those factors, I can try to apply it to the overall markets, and you can see that, hey, there is a possibility that we could be seeing the overall markets following the same path in the next couple of weeks into the next quarter, as we will get the end of the quarter rebalancing as well tomorrow, and possibly more buying coming in as well tomorrow and into the very first day of trading in April for quarter 2. So on top of that, we also, well, just to put a cherry on top, right, on all of this, if we are seeing a market bottom now, we also have the seasonal trend, right, the March seasonality that should carry on over to April, since March's seasonality trends kind of came in late due to the fact that we had a pretty rough start to March and a pretty rough start end to February as well, which led into a further sell-off into the beginning of March. So obviously there are a lot of factors that can go into the cancellation of a market bottom, right? Like the tariff deadline that we're really closely approaching now to April 2nd. So that could potentially be possibly the official market bottom. Maybe make a higher low, like we've been making a higher low today as well. But obviously we have yet to confirm a higher low, since we have been making short-term lower lows and lower highs since the top that we saw on Tuesday of this week, right, when we closed right above the daily 200 SMA. So to me, I would say that we're still in gray water here, right? In some gray waters. To me, we need to be seeing a little bit more of bullish bids coming in, even though we're seeing stocks like Visa and MasterCard showing early signs of potential market strength to come back and bids to come back as well. But yet again, right, we also have external catalysts that can completely negate this, a potential market bottom. But at the same time, with Visa and MasterCard coming up and closing at highs today as well, and basically retracing over 50% of the pullback that we saw since March, it could just be simple market rotation. Okay, so we need to be watching out for multiple factors to figure out whether or not a market bottom is finally in. But I would say for sure, decisively, from a subjective perspective now, I think the market bottom is in. Okay, now please take that with a grain of salt. Again, it's a subjective perspective and also a little bit biased since I am long. We did grab some calls on SPY to swing into April, so that's a little hint there. If you guys want to know the exact position, please become a reader of the CFO Swing Watch report, which will automatically give you full access to the private CFO Discord channel, and you guys will be able to see that specific trade that we have put on tonight, today, and we'll see how it goes. All right, so again, guys, with the question regarding is the market bottom finally in, it's a little bit iffy right now, right? But we're seeing more and more signs that we could be seeing a potential market bottom coming in the next couple of trading days, and especially into next month, which is the very first month of quarter 2. So obviously we had a pretty awful way to end quarter 1. If you just take a look at the 3-month time frame, okay, ugly looking quarterly candlestick, and depending on how we close tomorrow, right, we have a nice bearish engulfing candlestick, but hopefully it is not a bearish engulfing candlestick, as the body should, hopefully if I take out all my lines here, hopefully try to at least come up with a come all the way up, maybe back to like over 570, hopefully before the end of quarter 1. But who knows, right? This is still a very large and wide-ranging candlestick on a 3-month time frame. This is the quarterly time frame, as we all like to call it, and it's obviously above. Well, it has a higher high compared to the previous quarter, which was last year, the last fourth quarter of last year, and also a lower low compared to the previous quarter of last year as well. So, you know, it is what it is there, obviously, but you know, we've been moving straight up a lot, so it wouldn't be surprising if we have an intermittent bottom, right, and then we continue to go down all the way up into the end of quarter 2 or potentially the beginning of quarter 3, right? And we kind of saw that. We've kind of seen these pullbacks happening, similar pullbacks happening as well in 2022, right? Where, well, it wasn't really a pullback. It started a bull market, bear market in 2022. So when you take a look at these larger time frames, it really gives you a good insight as to, you know, kind of a similar pattern that we might be following of in 2022 and now for 2025, right? Depending on how the overall economy stands with all the tariff debacle, the crazy costly trade war that we've been seeing now. So, you know, we shall see, right? I mean, I've talked about this immensely for the past couple of weeks. All right, I even talked about this before the current administration came in. A lot of people questioned my objective data that I've provided, but hey, I'll stand my ground, and you know, I've given you guys this data before the market crashed, and well, I saw a lot of people that are staying silent now, not questioning my objective data and the analysis that I put out. So it is what it is, right? I tried to make sure that I'm giving you guys information that's useful, especially when it comes to like sitting on our hands. Which we've done so far for the past couple of weeks, and now this week so far, including late last week, we've officially started to finally put some of our raised cash into action, and so far it has been good. It has been good. Okay, it's still been a little bit iffy here and there, mixed trade results, but we're still starting to see a bit more good activity coming in as well, just through options flows too, as I put into the description box down below, that we're seeing some long-term call buying and some long-term put sales. That's good, right? So when we start to see long-term put sales plus some hedges being taken off, and how do you know if hedges are being taken off? Well, just take a look at the VIX, right? The VIX has been contracting very rapidly, even before the market officially bottomed, right, in March 11th. So this type of market contraction for the last couple of trading days in middle of March clearly indicates that you know, we could be in the process of a bottom. I'm not saying it's an official bottom, but well, obviously, you know, I can't confirm that just yet due to the reasons I've given you guys so far. But it's just simply telling us that, hey, it seems like institutions are now starting to reposition their hedges, or at least take them off for the time being. And now that we're seeing some long you know, put sales coming in as well, and so you know, we're seeing a lot of you know, these money inflows into these put sales and call flows. To me, again, it's a little bit iffy, but these are small, tiny good signs that we're seeing. That's what I have to say. All right, that's all I had to say for now. Again, subjectively, I would say that we are in an official bottom making process. Which obviously means that we are starting a bottom, an intermittent bottom at that, because again, my midterm perspective is still to the downside, since the overall economy is not looking too good for the future, and a lot of institutions and analysts are now saying that as well. They're always late somehow. I mean, we foresaw this. Well, I have foreseen this basically since late last year in November after the elections, and it was pretty easy to see because, again, President Trump is easy to read when it comes to his economic stances, right? Obviously not his actual actions, like his executive orders, or even just his tweets, right, or his truths that he puts on Truth Social, but you know, it was just easy to see that he's gonna have to hold the same stances and policies from his first term. So I don't know why Wall Street didn't see that, but I guess they were too hyped up for his potential presidency. But I mean, look at where they got us, guys. Look at where they got us, Wall Street, right? So so it's good to not let emotions run over you, right? Especially when it comes to political emotions. But it is what it is, right? It is what it is. I rest my case there. Okay. Alright, so that's kind of what I think, guys. Hopefully that gave you guys kind of an eye-opener as to where we're at for the overall markets. Commodities are raging. If you guys take a look at my stream on Tuesday, if you guys haven't, please take a look at that. I basically said, and I try to answer the question, why is 2025 the year to long commodities? And so far, commodities have been absolutely raging, right? Gold has been raging since 2022, when bought in 2022. And silver is now finally making a move, a huge return today at 2.59%. It seems like we're ready to make officially, finally, hit that target of 34 to 36 based on how option flows have been going. So, you know, to me, hey, thank you guys for all those likes. It's good to see that there are people still here and actively listening. But so, you know, I think overall we still have to be cautious for the rest of the year. We could still be seeing the beginning of a new bear market into 2026. Why is that? Well, I gave you guys a hint that 2026, early 2026 specifically, might be our official economic recession, right? And an actual recession coming in, and usually the markets you know, front run it, right? And so we shall see how that goes, right? Hopefully it doesn't turn out to be the debacle that we saw in 2022, where the overall government officials were trying not to say that we weren't in an official recession, even though we had back-to-back negative GDP growth. But hey, the past is the past, so hopefully we learn from that. But and we also have a new administration, but also this new administration is also kind of a little crazy. So especially when it's regarding the overall economy, you know, when seems like the administration is trying to wreck it somehow, and they don't really care, even though I'm pretty sure they do care. A lot of people on that aisle of the political aisle are also actively involved in the stock market. So I don't know why they're trying not to really care, even though I don't know if they're putting on a front but you know what? I'm not gonna go into that side. I'll be leaning a little bit towards the political topic of things, and I don't want to go to that. So, you know, the overall markets are just, it's looking good so far. It's looking good. It's holding its major short-term moving averages like the daily 10 and daily 21, and most importantly on the weekly. Right, we're holding that weekly 50 SMA. I love how we're consolidating over the weekly 50 SMA. I just absolutely love that. And so if you're able to break to the upside and just quickly move to the upside, just like what we saw with MasterCard and Visa, again, which are kind of precursors to, well, I like to call them as precursors as to what the overall markets can do, and follow, well, essentially for the markets to catch up to those individual leaders. And again, those are tech companies. I would say it's tech companies because it's a credit card company, a fintech company, I guess is what I could qualify it as. I know most people will say it's an overall tech company, or some people will say it's a tech company, but I would say it's a fintech company. Anyways, guys, what I'm trying to say here, to kind of close my thought here, is that if we do see a rapid rise and kind of follow in the footsteps of Visa and MasterCard, which I presume to be precursors as to how the markets can act in the next couple of weeks, I expect SPY to hit 585, which should coincide with either the weekly 10 and the 21 SMAs. Most likely it's going to be the weekly 21 SMA as it starts to curl down and as it tries to reach and catch up to the price. But I would love the price to actually catch up to the SMAs rather than the SMAs trying to move down to catch up to the price. Right? Because if that happens, well, if the SMAs are quickly coming down to catch up to the price, then that usually means that the price is basically moving sideways and not doing anything, or it's begun to move lower. Right? And we do not want to see that. So I always want to see the other side of things, where the price actually moves rapidly to the upside to capture and retest the the short-term SMAs. I'm too used to saying daily 10 SMA and a daily 21 SMA. That's the reason why that's never left my vocab here. My diction is what I should say. So Again, the weekly time frame here is very, very important. Remember that, guys, for the next couple of weeks. As long as we hold this weekly 50 SMA, we should be able to come back to retest the weekly 10 and the weekly 21 SMAs and essentially and hopefully reach 585. If not, we still have some other major levels like 580, 581, and 582. Okay, so again, do not fret. Even if you don't hit 585, we're still seeing some good upside targets that we could potentially hit if we are seeing this overall market bottom being formed. Okay, and again, subjectively, I believe that we are in the process of making a market bottom, which again means that we are in a market bottom. Again, I'm just saying it's a process because we're still seeing some heavy selling signs, even though selling signs have come down. Well, the actual selling has actually decreased, but the selling signs have increased, right? Like the tariffs, right? So, these external factors have to be weighed in for the overall markets as we're trying to formulate this bottom. So again, there's a lot to look at, a lot to balance out with each other when regarding sector rotation and the overall markets. But overall, I think we're making a pretty good structure here to continue to try to move up higher in the next couple of weeks, especially as we head into Q2 and into a usual seasonally strong month, very first month of Q2, especially when the March seasonal trends have been pushed off, right? So yeah, I mean that's pretty much what I had to say, guys. Hopefully this late night stream wasn't too late. Hopefully you guys don't become too sleepy. But hopefully that was very, very useful, but most importantly very, very applicable. Okay, all right, guys, so that is it for this week's live streams. Again, the actual schedule is Tuesdays and Thursdays for my streams. Okay, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Again, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time every single Tuesday and Thursday. And if you guys want to find out how to become a reader of the CFO Stream Watch report while also getting automatic access to the private CFO Discord community, please take a look down below in the description box and you guys will see the actual link to subscribe. All right, I highly recommend you guys to check us out. And if you guys want to start a trial, you guys can do that as well. There's multiple options. It's all up to you. Okay. Hey Joel, thank you for staying all the way through. Good night to you as well. Good night to you, and thank you for saying good stuff. I'm always trying to provide the best of the best information and relevant information at that, not just fluff. So hopefully, again, you guys have found this information useful, but most importantly, applicable to your own trading goals. All right, thank you so much for joining. Thank you so much for liking. Thank you so much for commenting and whatever you guys have done. Thank you so much for subscribing as well. I always appreciate you guys for coming on the live stream and joining me on the late night, like Thursdays and Tuesdays, or Tuesdays and Thursdays, in order, right there. But yeah, hopefully you guys have a great rest of your night, and good luck tomorrow.